Good day, everyone. Good morning, good afternoon, good evening, depending on the time you're going to be watching this video, right? So it's SM here, and today we are continuing our series that we started last week. And this time we're going to be talking about advanced market structure, how marketing move initially in an advanced form. So last week we talked on the basic market structure, which we all know the basic market structure. Show you how price moved on a basic form, how structure is on a basic form. So this time we're going to be diving a lot deeper, and we're going to be dwelling much on structure, market structure in an advanced way. Alright, so quickly let me just do some revision of what we did last week. So last week we were talking on basic market structure, and we said that a basic market structure comprises of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher highs. And we said something that in a basic market structure, the low is traded as the internal range liquidity or structural points, at the high is traded as external range liquidity, just like that. And so this high, this low, this high, this low, we expect this low to be protected until price proves it otherwise. Alright, so this session we are going to be talking on basic market structure and how to identify whether price is continuing in the direction or price is reversing or changing direction. Alright, so basically, so in an advanced form, in an advanced structure, I will show you the difference between a basic structure and an advanced structure. Alright, let's say this is a basic structure. We say higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low, higher high. So this is how a basic structure is. Initially, I said something the last time. I said price does not initially move like this, because if price moves like this, everybody should be a millionaire. Trust me, everybody should be a millionaire, because this thing is easy. This one is easy. So on a recent, price doesn't really move like this. Price move in a way, even though we can see trace it to be like this, but this is not how price actually move. Alright, so this is a basic structure. So an advanced structure can be something like this. Look, so let's say price is coming, then price does something like this, a sweep of liquidity and a breakout. I felt something that sorry, let me move this thing here. This one. I said something that a range starts from a sweep. That's just it. A range starts from a sweep of liquidity. Let's say this is our sweep of liquidity, and let's say we have a key level below that price reacted from. A key level that we are looking for buys. Let's say this is the key level. So what we should expect price to be doing in an advanced form is like, we want to see price create a low, at least like this, then come to take out the high, and price comes back again, take out the low, do something like this, take out the low, create again, do like this, just like this. So in an advanced form, this is how price actually move, like this. Sorry, this is how price move in an advanced form. You can use your trade line to spot it. Sorry, you can use your trade line to spot it like this, or like this. Anyway, sorry for the notifications. You can use your trade line to spot it like this. This is basically how price move in an advanced form, and there's a way we normally put it. There's a way I used to explain it. I use ABC. Let's go back again. Let's continue. Let's start again. I use ABC. So we already know that price move from external range to internal range liquidity. It moves, take out external to take out internal, take out external to take out internal. So the price that pushed, the points that push price to break structure is where we consider as our A point. Let's say this is our break of structure, right? That we are now bullish. So this particular point is where we say is our A. We call this point our A point. Our A point is the one that pushes price to break structure, and then the high that price created before the low is our B point. This is our B point, and then price cannot just be going like that. Price, we need to take out price. After price takes out external, we expect price to at least reverse, and then so this particular point, this particular low is our C point. And when it comes to our vast market structure, you expect the C point to be taken. The C point is always going to be taken. You get what I'm saying? The C point is always going to be taken. And then what the price now have to do? Price should just come down a little like this, take out the C, trigger from point of any key level that is right here, and then continue like that. And you see a new move like this. So this is basically how price move in an adverse structure. So also I said a range always begins from a sweep of liquidity, and what can you see here? You can see price sweeping this liquidity. We are beginning a new range. And this point is now our A point. This is our A point, our B point, our B point. When we are talking on liquidity, we are going to be explaining all of this. We are going to be explaining all of this. And I said something, expect the C point to be taken always. The C point will always be taken. And what do we expect price to do? Price to just come down like this, take out the C point, trigger from any key level here, and then continue going up. This is just how price will move, because price cannot just continue doing uptrend. But if you trace it, if you can trace it very well, if you can look at it very well, what can you see? You can see price created a low, a higher high, a higher low, a higher high, a higher low, just like that. So when you train yourself to understand structure, that's where the big work is. I used to say this thing, that I believe that when it comes to technical trading, in trading, market structure is the hardest, because it's very easy. Let's say, for example, now look at this. We have already knew our structure. Now we break up structure, meaning we are bullish. Our low is the liquidity. So we have already identified our liquidity. We know that we are going to be looking for a key level below this liquidity. We are going to be looking for a key level below this liquidity. No matter how many the key levels are going to be, we are going to be most paying attention to the one closest to this liquidity. So it becomes easy for we to know our liquidity and our key level when we understand structure. You get what I'm saying? It becomes easy to know our liquidity and our key level when we understand structure. Same also for a bearish trend. The same thing goes. We expect price to take out sweep, come into a key level, and then a break of structure. Then price creates liquidity, comes back, take out the C, and then the A, push it upward again. While the A is going, created the B, C. Expect the C to always be taken. Like this C needs to be taken always. It's our liquidity. And let me tell you something. If a structure, let's say structure does not have liquidity, expect the closest key level to be the liquidity. Are you getting what I'm saying? Expect the closest key level to be the liquidity. I'm using this example of engineered liquidity here is when we get into liquidity. We're talking about types of liquidity, or trend line liquidity, or inducement liquidity, engineered liquidity, sectional liquidity. What's the other one again? What's the other? Equal highs liquidity. Those ones you guys call double bottoms and double tops, or those kind of triple tops, triple bottoms, and whatever you guys call them. Alright, so this is basically how price move in an advanced structure. For a downtrend, this is how price move. In a downtrend, let's say there's a key level here, there's a key level below this, price just reacts from here and continue. Then price come in again, maybe price come in again, engineered liquidity, very close. Then price does something like this, and then C is taking, we continue the trend. So here's our A, here's our A, our B, here's our B, our B is this high, and then the C needs to always be taken. The C needs to always be taken. No, I told you guys that this low is going to be treated as internal rate liquidity or a structural point. It's going to be treated as internal rate liquidity or a structural point depending on the candle closure. I'm going to show you a chart examples so that you can see it. It's going to be treated as internal rate liquidity or a structural point. So how the candle closes is what tells us how the low is going to be treated as. You getting? For a downtrend is a high, while for an uptrend is the low. So it's when we get to the key level, liquidity, we're going to be explaining more on that. So here is our external range liquidity, and I told you guys that when price take out an external range liquidity, you are not expected to be buying at that time, because when price takes out liquidity, it heads back to take out internal range liquidity. Price take out external to take out internal, and from internal we take out external again. Taking out external, price needs to complete the cycle. Price does not just move like that. Price needs to complete the cycle, and when completing the cycle, it has to take liquidity from both sides. Are you getting me? You can call it your sell side liquidity, or you call it your buy side liquidity, all those kind of stuff. So that's just how the advanced market structure is in a sketch form. We are going to be seeing a chart example, but this is how it is in a sketch form. This is how it is in a sketch form. Sorry for my notification. Someone is waiting for me. We have a trade to take. Alright, so let me switch this thing back again for an uptrend also. So this is just how price move in a graphical form. This is just a graphical form. We're going to look at chart example real quick. Alright, so I don't want this video to be long. I have something that I need to do. Alright, so look at this now. Let's look at this. Let's look at this. This is how price move. Okay, so let's see. Currently, I'm paying attention to the trade. Sorry, I'm very busy right now. So I just want to let me do this thing. Let me do it. When we get to directional bias, we are going to be talking a lot more how all these things comes into play. Alright, so let me just go to the 2 hours time frame and show you something. Alright, so look at this. So price was bearish before. What can you see? Price was creating a series of lower lows and lower highs, lower lows and lower highs. Okay, price swept liquidity, broke out. Okay, from here we created a low, created a lower high, created a low, a lower high, created a low, a lower high, created a low again, a lower high, created a low, and then price shifted structure from here. It was a breakout. Now Now, the system that I trade, how we know that price is changing structure. Look at this. First of all, the first rule is that price should be at a zone where we know that possible reversals can happen from. Are you getting me? Let's say this is a key level where we are looking to buy for in a downtrend. Let's say this is our downtrend. I'm using to use this kind of a structure now. Let's say this is our downtrend, lower lows, lower highs, lower lows. Okay, let me see, try and use this. Lower lows, price, then pick up liquidity, created another low. And then price picks up liquidity, and then price coming into a key level like this. Price coming into a key level like this. And then this is how we know. Look, right? So let's say this is a downtrend. Price has been breaking structure, creating a lower low, lower highs, lower low, lower highs, lower low, higher, lower highs, lower lows, lower high, lower low. Price coming into a key level. The first thing that we want to see is that we want to see price give us a sweep of liquidity. Let me use this sweep. A sweep of liquidity and a break of structure. And I told you guys, don't forget that this is also a high, meaning that this high can be used as liquidity at the same time. But how we know is the candle closure. Let's say price coming like this and price creates a bullish candle from this particular key level, creates a bullish candle. Wow, I've not changed this by candle. Change this color real quick. Where's my color? Alright, so price closed above it with a full body. This indicates a trend change. So we call it a sweep of liquidity and a break of structure, meaning that what we are just expecting price to do is that we are expecting price to just at least come down like this, and then we continue the new move. I was explaining this in the last video I did. But in a situation when price comes into this key level and close below it, like this, what this means is that this particular high, or this high, was treated as a liquidity point, as an internal range liquidity. What we expect price to do, react from a key level and then we continue going down. Are you getting what I'm saying? But we are talking on like trend change now. So let's say price now closed above it with a full body. Close above it with a full body like this. We are expecting the trend to at least change. See, trading is all probability. Your ability to wait, to be patient, to see what price will do is gonna help you when it comes to trading. Trust me when I'm telling you this. Alright, so we just expect price to continue in the direction that it was before. And I told you something, that how you know that price is going to continue is for you is when price gives you a breakout. Are you getting what I'm saying? Price gives you a breakout. It confirms the direction. A breakout confirms the direction that we are okay. We are actually going in this direction. I'm a type of person that I don't trade reversals, so I always wait to see the breakout. Once I see the breakout, it gives me more confirmation that we are actually going in the direction that we want to go. So a breakout is used to confirm a direction. You can call it a breakout. You guys call it break of structure. Why this one? You call it a market structure shift, alright? Whatever you call it, it's not the name. Just understand the logic behind it. Alright, so a sweep of liquidity, or let me be using this, a market structure shift gives you, we now show you that okay, we are actually going in the direction. How you know is by the candle closure. The candle closure above the low. And it has to be coming from an higher time frame key level or bias. It has to be that this zone is coming from a very solid place where we can actually bet on that price will change from here. That's why knowing your direction is very important. Higher time frame bias is very important when it comes to trading. As far as you want to really make money in trading, higher time frame bias is very important. All right, so also for a downtrend, the same thing happens for an uptrend. An uptrend, if price you want to change direction for a downtrend, just like that. I'm sorry, price created a high, a low, breakout, higher low, just like a higher high, then price sweep the previous low, close below the previous low, close below the previous low with a full body candle, indicates trend changes. All right, let me change. Let me go to the chart. Sorry, page trading view. My God. Let's go to the charts. So I was saying something. Okay, now look at what I was explaining. So price now coming into an higher time frame key level. This is an higher time frame key level. All right. So what we want to see is that we want to see a sweep and a break of structure to confirm our direction. Don't forget that we are still talking on structure. We're talking on advanced market structure. All right. So how you know is that you go to your line chart. Once you go to your line chart, what can you see from here? You can see that price got this one a sweep, and what the price did, price broke out. Not just this one zone, but two. Price broke out from this zone. Price broke out from that zone. Now this is now an indication that price is going to change direction. And I told you something. How we validate it is when we wait for a breakout. But let's just focus on this. We are teaching on advanced market structure, not entries or all those things. So now I said the zone that pushed price to break is what we call your A. So this place is your A point. This place is your A point. The break is your B point. This is your B point. I would love to change this trend to this chart to 1 hour chart. I want to see something. Now this will be your B point. I will say your C point is expected to be taken always. So the low that price creates after the B is your C. That's your C point. This is your C point. This low is your C point. And then what do you expect price to do? Price to just pick a key level below it. You can use this particular key level, or you use this particular one. Going to the 2 hours time frame. On the 2 hours time frame, let's use this 2 hours structure. So initially, this is the key level that I'm going to use if I was paying attention to this trade. This is the key level I will use. You get what I'm saying? This is the key level I will use. So now, I hope you understand what I'm saying now. A, B, C has been taken. Now, if this move breaks out from this particular point, this point now becomes our A again. This point now becomes our A because we are now building a new range from here, a sweep of liquidity and a breakout. It's a new range. Are you getting what I'm saying? It's a new range. So initially, price coming into this key level now, I told you guys that I don't trade reversals. I like to wait for confirmations. I use confirmations a lot. So I want to see like a breakout again on the lower time frame. What can you see here? Price broke out again. Price broke out. Now this point is now our A. Look at this. This point is our A. I'm just showing you how I trade. Are you getting what I'm saying? It's our A. This high is our B. The low after the breakout is your C. This low, that's your C. And I said expect C to be taken. Expect C to be taken. Alright, you always expect C to be taken. And what the price will do, price will just pick a key level below, this A-shaped key level, that's what we use. Sorry, this is V-shaped key level. And then I can go in from here. Stop loss will just be below this particular low. That's like a 5 pip stop loss. So based on this is an higher time frame trend, I would like to be targeting like a higher time frame high. You get what I'm saying? Like this. That's not what we're doing. I'm not talking about target. We're talking about structure now. Alright, so then price broke out again. Bodily break. A bodily break. This low that push price to break is your A. The low that push price to break is always your A. This high, this one is your A. And what is this? After the breakout, this candle is now your C. It's now your C. Is now your C. Or when we are talking on liquidity, you're gonna understand why this particular place is serve as liquidity also. This particular low serve as your C also. When we get to liquidity, we're gonna be talking on that. So this particular place serve as your C. This particular point, because see, if you check very well when I was drawing this I made mention of something. Look at this. So price break. Then before this breakout, price created a low. You get what I'm saying? Before this breakout, price created a low, and I said you expect that low will serve as your C. Expect the low to be taken out. That was what price did here. Before the breakout, price created this low. And this low will be serving as our C, and price will just pick a point of a key level below the low. This is the key level that is below the low. This particular key level here is the one below the low. That is the one price will just pick, and then we'll continue going up. Now this one is for engineered liquidity. What did price do? Price broke out from here again. Breaking out from here. This becomes our A. This becomes our B. The engineered liquidity that price created here becomes our C. And what do? You pick a key level below this particular A-shaped key level that was disrespected a lot of the time. So price just continues going up. Structure based. This is you are just aligning structure with higher time frame direction. So this is how price move in an advanced form. And not just the random higher highs and higher lows and higher highs and higher lows that we talk about. Alright, so that's just it. Looking at this as well, price broke structure again. Price broke out from here. We closed with a full body candle. This candle closed above it. So the low that price created becomes our liquidity. You get what I'm saying? The low now, the low that price created in an uptrend after a breakout is the C. And then what did price do? Price just pick a point of interest, and then we continue like this. And I told you guys, a range begins from a sweep and a breakout. You can see a sweep and a breakout. This becomes our A again. Then price just continues, and we keep going, keep buying. I don't want this video to be very long. We just keep buying like that. Expect internal to be taken for external to be taken as well. Just like that. Price just keep on going. Using this as our C again. So our C here as our C. And then what did price do? Price just came down here, pick a key level from here. And then we just continue going up. The same thing. the same thing here. This one is an internal structure. We are paying attention to this external structure. Continue just like that. Price just keep moving till we get to where price is now. Alright, so that is basically it. Alright, so in our next video we're going to be talking on liquidity. We're diving into types of liquidity and the forms of liquidity. Alright, so peace, have a nice day.